Hello, this is Greg Smith from Morrison Lowe. This is the second of the financial information sessions, and this session is about council's current financial position. We work with council and undertook a financial sustainability assessment, which basically used all the the financial statements that are audited, all council's financial records, quarterly reports, the budgets, um, all the capital expenditure reviews, the permissible income calculations for rate, and also the Office of Local Government financial data. So the financial sustainability assessment was based on publicly available information, and that is basically factual. So it's important to sort of establish that from the start. This is information that's available to everyone. We've also then looked at some improvement savings and opportunities for council, and then we've suggested some sustainability solutions going forward. Again, Morrison Lowe, we're a local government specialist consulting group. We've been in operation since 2000, and we work exclusively in local government in Australia, particularly in New South Wales. So what is financial sustainability for councils? Well, basically, councils need to have the financial capacity to meet the reasonable needs of its current residents while not placing an unfair burden on future generations. What does that mean practically? Basically, you need to not spend more than you earn. You need to make sure you've got plenty of cash or adequate cash to pay your debts, making sure you spend appropriately on all your infrastructure assets, and continually explore financial improvements and sustainability options going forward. Local councils in New South Wales have been under financial strain for a long time. For example, the operating performance ratio on the graph there has dropped quite considerably since 2016, which basically indicates whether councils are running at a surplus or a deficit. And then you can see around 2020, on average, the councils in New South Wales had a negative operating performance ratio. From the 23-24 Audit Office report, 47 councils in New South Wales reported an operating deficit. That represents 40% of councils in New South Wales. 35 of those councils met none or only one of the three key financial sustainability benchmarks. And further, 16 councils have insufficient cash to meet the 3 months of expenses going forward. So it's a fairly challenging environment to be in for councils for them to remain financially sustainable. If we look at Glen and Severn's financial performance over a period of time, they have been in a challenging position for quite a period of time. The red circles there indicate that in 2020-21, they had an operating deficit, and they continue to have an operating deficit going forward. But the biggest challenge is in the general fund, which is off to the right. There's a bigger deficit, and that is the challenge that council's trying to deal with at the moment. So this has been in place for quite a while. It just didn't happen overnight. It's been there for quite a while. So what's driving the financial unsustainability of councils across New South Wales? Firstly, it's the rate peg, and that's been explained in the previous presentation I did, but basically it's capping how much money councils can increase their rates by. And as that graph indicates, that increase is significantly lower than the CPI, for example. And when you think about that over 5 or 10 years, it has a significant accumulation impact. Other things that are impacting on financial sustainability of council is the cost of wages, inflation, scarcity of contractor materials, the cost shifting from state and federal governments to local government, that is moving responsibilities that the ratepayer has to pay for. In the 2022-23 Local Government New South Wales Cost Shifting Report, the estimate there was the average ratepayer paid $460 for all those costs that have been shifted to councils. So that in itself, that's the amount of money that's got to be paid back to the state or federal government. Communities are expecting more services, higher standards, and then you've got, we've all seen this changing weather conditions recently and the impact that has on assets and facilities within councils. The other thing that's been happening in more recent times is government grants and spending is also reducing, and there's less available cash for councils to spend on services and projects. So our assessment of council's financial position is summarised here. Firstly, the 23-24 audited financial statements. The general fund for council has a deficit of $5.7 million, and at the end of June 24, there was a negative unrestricted cash position. That is, general fund had run out of cash for a period of time. The findings from the independent financial sustainability review that we undertook indicated that there is this ongoing and persistent operating deficit for general fund in the order of $6 million. At the same time, council was spending or had planning to spend adequate money on asset renewal and maintenance, which is a good thing. Your water and sewer funds, they're in a good position. They're running at surpluses over the 10-year forecast period. So the main problem that council's trying to solve here is the ongoing operating deficits for general fund, which then ultimately, if we fix that, will fix the cash position. So why do council need a special rate variation? Well, it's to solve the ongoing operating deficit. So at the moment, expenditure is higher than income. It's that simple. And if you have an operating surplus or a break even, then you've got cash in your bank to do what you need to do in terms of delivering services and maintaining assets. And if you have a balanced position, then that will fix the negative unrestricted cash position. So some of the financial solutions that we work with council for and council have included in their budgets and their long-term financial plan. So there's improvement savings to date of $1.4 million for 25-26 and a further $600,000 included in the 26-27 budget. Also, there's ongoing reviews of services that will provide savings of $100,000 a year for 5 years and also improve efficiencies across the operation of council. And finally, there's a need to increase rates over and above the rate peg so that council can solve the operating deficit problem it has for general fund. So what are the special rate variations being considered by council? There are three options. There's a sustainability option over 2 years of 28.5% and 21%. That includes the rate peg amount that you see in the first line of 3.5 and 3%. And then you can see the cumulative numbers over to the right firstly for the period of the special rate variation and then for the period ending in 28-29. That's the 3 years, so that everyone can see what that increase would be for all the options. Then the growth and prosperity scenario, there's a 2-year option there, and then growth and prosperity scenario, there's a 3-year option there. These are being considered by council at the moment, and they will be going on public exhibition and engagement for feedback. What does it mean to the average ratepayer? Look, there's lots of numbers here. So this is the residential average rate. So if you look at the growth and prosperity over a 3-year period, you can see increases of 272 and 259, say in the first 2 years. So I will leave you to look at that at your leisure because there's lots of numbers there. The same with the farmland. Again, it's the special rate variation options are the same for all rating categories. So they've been applied to your 25-26 estimate rates and then forecast forward. And finally, then the next one is the business rates. Again, you can see the estimated changes there over the 2 and 3 year option. And the last one is a mining rate. There is one mine in your council area. So, as I said, council is considering these options, and they will start the community engagement process on the 17th of April, and that will run until the 6th of June 2025. Now, that engagement process will also include aspects of the integrated planning and reporting process. That includes your community strategic plan, your delivery program, your operational plan, and obviously the long-term financial plan and asset management plans. So this is a comprehensive program that aims to provide the community with all the information in terms of what council is planning and programming to do and what resources it needs to deliver on these. And as a result of that, to maintain the current services, council needs to consider applying for a special rate variation. And that information is included in all those documents. So the range of activities for community engagement include direct mail, traditional media, town hall meetings, social media, and very importantly, council's website. All the information in relation to the special rate variation, all the reports, all the information is on council's website. Have your say. And if you need any other information or you're unsure about the information, please give council a call. As I said, there's information available on council's website. You can visit the IPART website, and please take a look at our other videos in relation to rates and special rates variations. Thank you.